So one of the most common forms that we're seeing about improperly filed ERC claims right now that's being sent out from the IRS, and this went out to a bunch of taxpayers very recently, and basically stated that the taxpayer overclaimed the amount of ERC they are eligible for the 2020 time period. So I was going to walk through this real quick with you and explain what it means. It explains how you can rectify this, because this is kind of the first area where the IRS is looking at to say, hey, did you actually file this ERC correctly? And if you didn't, watch out, because there might be additional scrutiny. So this is an actual overpayment notice. Now I've removed all the identifying information so that there's no information about the actual taxpayer here, but it looks something like this. And so if you've received one of these letters, it's because you claimed the ERC, but based off the IRS records, you claimed too much. Now, the reason that is because in the 2020 time calculation was much more complex than the 2021 time period. And basically what the IRS is saying is that you claim too much. So there was a rule back in 2020 that said that over the entire course of the year, you could claim no more than 50% of your qualified wages. And that over the entire year, you could have more than $10,000 of qualified wages per employee. And so the way this works is that the IRS goes through and they look at your W-2 report. And so what we've seen oftentimes is there might be errors on your W-2 reports. For example, we had a client come to us who received this letter, and even though he had listed 7 employees on his 941, for whatever reason, the W-2 he filed with the Social Security Administration only had 1 employee listed. And so as a result, when the IRS is going through and looking at their internal data, the computer spits out that he's only eligible for $5,000 in tax credits, when in reality, he was eligible for 7 times 5 or $35,000 of tax credits. And so, but the IRS doesn't know this was filed in Form W-2. And so the first thing you're going to see here is the summary of proposed adjustments. Now, if you get this letter, remember, this is just a proposal by the IRS. They're not saying this is de facto. They're not saying this is certain. They're saying this is what they propose based off the data you have. And then they give you a calculation. They break down each individual quarter. And this is where a lot of the confusion comes in for a lot of folks who may have improperly calculated their ERC. And the reason the confusion comes in here is because you file for the ERC on a quarter by quarter basis. So you can see here, June 30th, 2020, September 30th, 2020, December 31st, 2021. So we file for these on a quarterly basis, but the statutory cap is on an annual basis. And so a lot of folks, if they either try to do this themselves or they hire somebody who wasn't familiar with the calculations, may have overclaimed the refund inadvertently because it wasn't complex. So what the IRS is they give a proposal of exactly how much the statutory maximum they think you're allowed. So there's the number of employees times 16 times 5,000 is $80,000 of total wages. Very simple math. And then they look at your maximum ERC and then the amount you filed for every single quarter. They subtract that until you get to 0. And then if you have more ERC than the total maximum amount, they identify, oh, there's an overstatement here. So in this particular case, there was a $61,000 overstatement. So you go down to the bottom right here, adjustment increase in liability, $61,800. And so this is the total amount of ERC that was received by the taxpayer that was above and beyond what the statutory maximum could have been. Now, if you go down here, that's nice and scary. Like, oh my gosh, I owe $61,800 in taxes. And so at the very bottom here, you could see here that while the total adjustment increases liability and the summary proposed adjustments is based only on an explanation on the first page, we've also determined you claim more than your qualified wages. And so if you agree with this, then submit a letter. Or if you agree with it, you have to just pay the tax back. But if you don't agree with it, you need to submit a letter explaining why you disagree and the reason for the credit disallowance. And the other client mentioned who had 1 employee, but he had 7 employees on his 941, we're preparing a letter explaining the error and what the error was and how we propose to rectify it and why the employer was actually eligible. In this particular client's situation here, interestingly enough, the taxpayer did not overclaim the benefit. What we've seen a number of times is that the IRS actually made an error on either the calculations here and the amount they listed as reported, or in some cases, we've seen error where the IRS issued a check in error and overpaid the taxpayer the amount. And so it's incumbent upon the taxpayer to explain why they may disagree with the reason for the credit disallowance. And the reason this is super important is because if you don't provide a statement explaining why, well, this is the first test, and that the IRS doesn't go through and determine, well, do the other periods in which you claim the credit, do they deserve additional scrutiny? Do we need to go through an additional additional audit, additional review. And so it's very important if you get this letter, don't just let it sit, goes away. It's very important to one, double check the accuracy of the calculations, and two, respond accordingly, explaining either how you made the calculations, why there's an error, why there's an adjustment, and respond accordingly. Now you'll notice that you don't have a whole lot of time to respond to these things. This letter was mailed out on the 12th of January, and they want a response, on the 11th of February. So not a lot of time to respond. So highly recommend if you get this letter, jump on it immediately. And if you need a trusted advisor to review this for you, reach out to us. We're happy to help, and we're happy to identify where there might be errors and how we might be able to help you rectify this.